every single month I get dividends from my dividend paying stocks. And now I will share with you a snapshot of my dividend tracking schedule. You might be wondering, well, Jumoke, I'm not a finance person. Where do I find this information on dividends? And I'll show you precisely where you can find it. So how would you like to wake up every morning knowing that your bills and your lifestyle are completely funded, not by your 9 to 5 or by a job, but by passive income? Well, it's absolutely possible because that is partly how I fund my lifestyle in early retirement. So in this video, I'm going to show you how to generate $1,000 a month in dividends, either to earn passive income if you're still in the 9 to 5, or perhaps fund an early retirement lifestyle like I did. So stick around to the end because I'll also be sharing with you my personal dividend schedule and some favorite dividend paying stocks and funds to get you started. If you're new here, hello and welcome. My name is Olajumoke. Hello to all of my new subscribers. I retired from my 9 to 5 in my 30s and now I live off of my investments. On this channel, I talk about my journey towards early retirement as well as personal finance, investing, wealth creation, and self-improvement. If that sounds like something that would be of interest to you, do not forget to hit the subscribe button, click the notification bell so you don't miss any of my new videos. Let's get straight into it. So what I'm about to share in this video is partly what funds my current lifestyle in early retirement. I invested in two types of stocks. One is growth stocks and the other is value stocks or dividend paying stocks. And that's the portion that we're going to focus on in this video. Now, I need to give this disclaimer before I start this video. I am not a financial advisor. I am not providing financial advice or tax advice, and I will always recommend that you speak to an independent financial advisor who can walk you through your personal journey, who can review your financial standing and provides the best tailored or bespoke solutions to build and grow your wealth. Now, I built my portfolio over an extended period of time. And I did it in such a way that every single month I get dividends from my dividend paying stocks. So I'm extremely excited to be filming this video. I don't know if you can tell, but I absolutely geek out on financial markets, investing. That's just my comfort zone. And so I'm really happy to be sharing this knowledge with you in the hopes that it can help you start earning passive income or start saving for the future. Now, one thing to note is that dividends are subject to taxation. And what that taxation would look like will differ according to your jurisdiction. So please note, you do have to declare income on dividends and pay taxes on it. And I'll expand on the taxation side of dividends later in the video. But at this point, I would like to bring us back to basics. So what is a dividend, or what are dividends? When you buy what we call common shares or common stocks, you're essentially buying a fraction of a company. And so therefore you become a part owner of that company. And when said company makes a profit from their operations, they essentially reward you for your ownership by paying a fraction or a portion of their profits to shareholders in way of dividends. And what this means for you as a shareholder is that you can benefit from ownership of that stock. You don't have to sell it. You can earn income from it whilst you hold it as a shareholder. Now, depending on the company that you've invested in, dividends can be paid either monthly, quarterly, semi-annually, or annually. It all depends on the company's dividend policy. Now, the key is to find strong and reliable dividend-paying companies that can help you build a consistent or steady cash flow. So how can you generate $1,000 a month from dividends? So we're going to break this part into 3 steps. Step 1 is to understand the meaning of dividend yield. Now, dividend yield can be defined as the portion or the percentage of a company's stock price that it pays out in dividends each year. Now, there's a little portion of maths involved, but please do not get put off by this because it's essential you understand it. So your dividend yield can be calculated as the dividends you receive per share, i.e. the dividend you receive for every single share you own, divided by the stock price times 100. For example, if a stock is priced at $100 and it commands a $5 dividend, the dividend yield is $5 divided by 100 times 100, which is 5%. So this means that for every single $1,000 you invest in that stock, you get back $50 in dividends each year. Easy enough to understand. Now, this is the part where we need to apply just a little bit more mathematics, but please do not get put off. It is really crucial you understand this. It is very basic, really simple. So please stay with me, because the second step is to calculate how much you need to invest in order to achieve your goal. So if the goal is $1,000 per month, it means that your annual dividend requirement is $12,000. Now, let's assume that you found a stock that has a dividend yield of 4%. As I said, your dividend yield is your dividend per share divided by the share price times 100, similar to the example we went through earlier, where you were getting $50 for every $1,000 invested. So the dividend yield in this example is 4%. Now, to find out how much exactly you would need to invest in order to get $12,000 each year in dividends, the calculation will be $12,000 divided by 4%, which is the dividend yield, and that will give you your capital requirement, which is $300,000 a year. And this formula is exactly the same as the dividend yield formula, just reorganized a little bit. So this means that if you invest $300,000 a year in a stock that has a dividend yield of 4%, you will get $1,000 a month or $12,000 a year in dividend payments. So let's try another example to bring this home. Let's say that you've saved up $120,000 in capital and you are after $12,000 in dividends every single year. What would be your required dividend yield? Exactly. It would be $12,000, which is your required dividends, divided by your capital, which is $120,000, which gives you 10%. So your dividend yield requirement would be 10%. And so you see, this is super interesting and quite easy once you know what to look out for and how to connect the numbers. Now, the third step, and I dare say the more interesting step, is to choose your dividend paying stocks. As I mentioned at the start of this video, I invested in two types of stocks: growth stocks as well as dividend paying stocks. Now, growth stocks are typically stocks that are, exactly as the name says, in their growth phase, or they are stocks that tend to grow at a faster pace than other stocks like value stocks or dividend paying stocks. So you tend to find quite a few tech stocks in the growth categorization, whilst you might find banks, utility companies in the value categorization. Now, these are just two or three examples of sector classification. It doesn't mean, of course, that all tech companies are classed as growth companies and all banks or utility companies are classed as value companies. Not at all. You do have some tech companies that actually pay out in dividends. For example, Apple, and I believe Meta as well, has just recently started paying out dividends. So you do have some tech companies that are now graduating from being growth stocks to value stocks. When choosing single stock positions or when investing in individual stocks, the recommendation is to look out for stocks that have a very strong track record of paying consistent and growing dividends. And some examples of this would be stocks like Johnson & Johnson, which is a rock-solid healthcare giant with decades of dividend increases. It currently has a dividend yield of 3.4%. Another example of this would be Procter & Gamble, which is a consumer goods powerhouse paying steady dividends. It currently has a dividend yield of 2.4%. And a third example would be a company like Coca-Cola, which is a dividend favorite with global brand dominance. And it currently has a dividend yield of 3.11%. A fourth example would be AT&T, which is a US telecommunications company, which currently has a dividend yield of 4.58%. Now, the first three names, Johnson & Johnson, Procter & Gamble, as well as Coca-Cola, are actually known in the dividend investing world as dividend aristocrats. And this is because these companies have consistently increased their payouts, forget this, 25 plus years. You might be wondering, well, Jumoke, I'm not a finance person. Where do I find this information on dividends? Well, thank you very much to Google, because all of the information you need is online. And I'll show you precisely where you can find it. Type in the company name into Google, and at the end of that, put in share price. So Coca-Cola share price. And as you can see, you get this graph of what the stock has done over time, over 6 months, 1 year, 5 years, etc. And just beneath that graph, you can also see the dividend yield. So you don't need some paid for fancy app that gives you the information about dividends. It's all online and it's accessible for free. Now, if for you, picking single stocks is overwhelming, and of course it can be when you're just starting out, this is not advice, it's a recommendation. One recommendation would be to look at ETFs, which are exchange traded funds, or perhaps mutual funds that can essentially do the work for you. So an exchange traded fund is essentially a fund that trades like a stock. It is a basket of stocks that are focused on perhaps a sector, a strategy, or a market as a whole. And there are many options to choose from when it comes to ETFs. And a mutual fund, on the other hand, is set up similarly to an ETF in the sense that it can be a basket of stocks, but it is a little bit less liquid because unlike ETFs that trade all through the day, mutual funds tend to trade once a day, which is typically at the end of the day. But the bottom line is that these two instruments or investments can be used to achieve the same goals of cash flow in terms of dividends. Now, here are some examples of dividend-focused ETFs and funds. The first one is the Vanguard High Dividend Yield ETF. And this works exactly as the name suggests. It is an ETF that holds a diversified basket of high-yielding dividend stocks. The second example is the Schwab US Dividend Equity ETF. And this fund is focused more on high-quality dividend growers. And the third example is the Global X Super Dividend ETF. Although this ETF pays out a high dividend yield, it also comes with additional risk. And the beauty of these ETFs or funds is that they spread your risk across a panoply of dividend-paying stocks, which makes it easier for you to earn consistent income. And also, if you have some curiosity around what these ETFs tend to hold, they actually give you the breakdown. So if you go on the page of the specific ETF that you are interested in, it breaks down its composites by sector as well as stock names. Now, you might be thinking, as I've done in the past, that it might be easier to just replicate the composites for yourself. That is a good thought. However, some of these ETFs have hundreds of underlying stocks within them. Imagine monitoring a portfolio that has 500 to 600 stocks within it. No, thank you. And that is precisely why when you invest in these funds, you pay what is called an expense ratio. The expense ratio pretty much covers the management of the fund, paying for the managers of the funds to leverage their skill set, their expertise, their time in managing the fund on your behalf. As I mentioned previously at the start of this video, I do get paid dividends every month. And some months are a lot higher than other months. I will admit there is a little bit of an art in crafting your investment portfolio in such a way that you get monthly cash flow. And that's because some stocks pay monthly, others might pay quarterly, others might pay semi-annually, and others might pay annually. And it does take a little bit of time to do the research, figure it all out, but once you do, it is smooth sailing from there. So as a recap, in order to earn monthly dividends, depending on what levels you would like and depending on how much you have to invest, you need to, number one, figure out the dividend yields. Number two, calculate how much you need in capital in order to achieve the dividend cash flow you need. And number three, pick high quality dividend paying stocks. I am absolutely meticulous about tracking my monthly dividends. And it took me some time to structure my portfolio, as I said, in a way where I get monthly income. And now I will share with you a snapshot of my dividend tracking schedule. And as you can see, some months are a lot higher than others. You do have to pay taxation on your dividends. However, the good news is that depending on your country of residence or your investments, you get a small portion of an allowance, a tax-free allowance. I'm based in the UK and we do get a dividend tax-free allowance. It was previously £2,000, but as of the tax year 2024 to 5 and beyond, it is now £500. And what that means is that on the first £500 of dividends, you pay no tax, but anything above that will attract or command a proportion of taxation, and it all depends on your income tax bracket. Here is some information on dividend tax levels, and as mentioned, it all depends on your tax threshold, and you get taxed progressively, as you can see. But there is a little bit of good news, if you can call it that, which is that dividends actually attract a lower rate of taxation than your income tax. So here are some bonus points for growing your dividend income. Number one, reinvest your dividends. You can use a dividend reinvestment plan, which essentially will help to compound your returns over time. So you not only earn on your initial portion or capital, i.e. your initial amount of shares, you also earn on your dividends if your dividends are reinvested in that share, i.e. your dividends are used to buy more shares for yourself. Number two, diversify. Do not rely on a single stock. It is recommended to spread your investment or your capital over a basket or panoply or several options of investments. Number 3, focus on growth. Focus on companies that are looking to increase their dividends every year or at least are paying out dividends consistently. Number 4, seek professional help. A lot of this can be very overwhelming if you're not entirely sure of what to do or what you're doing. And so it is worthwhile speaking to a professional who is well versed in investing and can structure or tailor a portfolio that can meet your needs. And number 5, stay patient and stay consistent. The whole world of investing and wealth creation I've seen is a long game. And so it does require patient capital. But the sooner you start, the earlier your hard-earned income can start working for you. So now that we know how to build a $1,000 per month dividend portfolio, what's your next move? Let me know in the comment section if you are already invested in dividend-paying stocks, or perhaps if you have a different insight into how you structure your dividend investing. And just like that, my dear friends, we've come to the end of the video. If you found it helpful and you're not subscribed, don't forget to subscribe. Hit the notification bell so you do not miss my new videos. I will see you in the next one. Look after yourselves.